Hi guys, thanks for tuning in to another episode of Nuggets News. Today, welcome a very special guest and another one of my investing heroes, and that's Mike Maloney. So, for those that don't know, Mike was one of the first people that I followed over 10 years ago now after the last financial crisis, and he took me down the rabbit hole. Most of you have watched his Hidden Secrets of Money series and all the other content that he creates. So, thanks so much for joining us today, Mike.
It's great to be here. Thank you for having me.
I wanted to make this the most up-to-date, the best possible interview we can do for everyone at home because there is so much going on. And literally a few hours ago, the Fed announced QE infinity. But I wanted to dive into, to begin with, what's going on, because the virus is sort of copying the blame at the moment. And a few weeks before that, it was climate change that central banks were promising they were going to save us all from. But these are just the pins that have pricked the bubble. So I want people to really understand.
Right, this was all destined to happen. And that's one of the things that people have to realize is it would have happened anyway. And this is the fault of central bankers. It's not the fault of the coronavirus. The coronavirus isn't just a pin popping a bubble, though. It really is like a guided missile, multi-drone attack, shotgun approach. I mean, it's an atomic bomb going off, popping all of these bubbles in what I call the almost everything bubble, because not everything is in a bubble.
Yeah, and everything we talk about today, I want to tie back at the end because I think this is really what it's sort of revealing is the need for savings. And we've just gone to this world that everyone is just so indebted and we've borrowed so much from the future. And whether it's these big corporates or it's the small guy that's lining up to get benefit claims now by the thousands or millions, no one has any savings. And that's the system that is causing all this. So I just wanted to get your thoughts about all that, whether it's markets or individuals.
Well, one of the things that people don't, you've got all these politicians now all coming up with answers. We'll print all of this currency and we'll give it to this group and we'll print more currency over and we'll type some currency into these accounts. And they're creating Aussie dollars and US dollars and euros and yen and yuan all over the planet. There's currency being created now at a frantic pace. Currency is not wealth. It measures wealth and it temporarily stores value and can transfer it from one thing to another as you work, you get paid. But when you work, you've created something. If you're pushing a broom, you created a clean floor. If you're an artist, you created something that somebody else wanted. Or you're a farmer, you grew something. That's the wealth. When they print currency, it doesn't create any new wealth. So all it does is redistribute whatever exists. And if the world is, if all of the new wealth generation that is constantly happening, we're always generating new wealth. If that slows down or stops, because right now in Puerto Rico, I mean, we are under lockdown here. There's a curfew. If you're traveling somewhere and you don't have a reason, if you're not going grocery shopping or picking up a prescription, or if you're not an emergency service doing medical supplies or something like that, you can go to jail for 6 months or get a $5,000 fine. So, and there are people being arrested for they've closed the beaches, they've closed everything. Any place that the public comes in contact with each other. So all restaurants were closed unless they do takeout or it's a drive-through. All businesses, like if you own a clothing store or a dry cleaner or anything like that, hardware store, you're closed. My assistant just had a tire blowout and he can't get another tire. So if he's using his spare, but if that blows out, I mean, he's now got a car that doesn't work. I sent him to, there's a place here. We've got places like Costco and Sam's Club. I don't know what you've got there, but some big warehouse store. And it's still open because they've got food. Home Depot, which is like all hardware and home, stuff. If you have a plumbing problem or if a window breaks or something like that in your house, you can't get it fixed right now. None of that stuff works. But he goes to Sam's Club to get me an exercise bicycle because I'm going to cancel my gym membership, and that gym will probably end up going out of business. I would imagine 80% of the restaurants in Puerto Rico are going to end up going out of business. A lot of this is not a wealthy place, and a lot of the businesses live hand to mouth, where they've basically, if they have to shut down for 2 weeks or a month, they're not going to reopen. But he goes in to buy this exercise bicycle, and they've got some racks, because I was one of the people that was early on this coronavirus thing. I started getting prepared in January. I saw what was happening in China. I knew it was going to be sweeping around the world. And I would tell people, and they go, "You're just being alarmist. Stop trying to panic everybody." Well, I got prepared early, and I didn't panic, and I'm not panicked now. And all those people that were telling me I was being alarmist are now telling me about coronavirus, and they're all panicked because they can't get the stuff. But you can't buy an exercise bicycle. They've got certain sections of this store. You can buy food, and you can buy pharmaceuticals, and you can buy alcohol. But you can't buy an exercise bicycle. They've got that roped off. Yeah. You can't buy storage racks. They've got that roped off because the government here said it was illegal to sell. And then there's also there's a couple of awesome farmers markets. They're outdoors, right? But you can't have gatherings of people. So they've closed down the outdoor farmers market, and they make you go into a store where you're in close proximity of other people, instead of out in the open where there's a breeze, where food has been picked by one person and brought to you. They're making you go into a market, a store, and touch food that a whole bunch of other people have touched. The stock boys, the people in the back room, the trucker that brought it there, So they're exposed. They don't realize the consequences of their own actions and the stupidity of some of it. But we're going into an economic Armageddon here. You can't just close down the business of the world and then pass out free currency to everybody and expect that to work. There's no new wealth being created.
Yeah, and hopefully people that have followed you, Mike, and I know I put my pharmacist hat on as soon as we found out the characteristics of this virus in January. I also did a video saying I think this is going to be nasty. But the next question I wanted to talk about was, with all this currency creation around the globe, there's a couple of interesting things happening. And the first thing is that the US dollar is strengthening, and also that the velocity of money, as you say, is going to be very, very low while everyone is at home and they're not spending. So we are not going to see any inflation until people start to spend all that currency that's being created. Right. And we're not probably going to see the US dollar lose its value for the time being, while there's this rush to it as a safe haven. But once people are confident that the dust has settled a bit and they start to disperse that money, that's when I think the US could lose value. I want to get your thoughts on all of that.
Yeah, well, first of all, the dollar, people are trained to rush to the dollar as a safe haven. And that's part of the reason it's rising. But another reason that it's rising is so much debt globally is denominated in US dollars. Yeah. And so many financial trades, contracts are denominated in dollars. And so to close out a trade or to pay anything back, you have to acquire those dollars. So you have to go on the foreign currency exchange, the Forex, and sell whatever currency you've got and buy dollars, and that drives the dollar up and your currency down. And that's happening globally. Plus, you've got this rush toward the safe haven of U.S. treasuries and the U.S. dollar. What was the other part of the question? I'm sorry.
I'm talking about inflation once velocity of money picks up.
Well, your viewers, we have a video series called The Hidden Secrets of Money that we've produced over a number of years. And Dan Rubach, a fellow Tasmanian, by the way, and a wonderful guy, he is the producer director, but he's also like he shot, and anything that you see that's live action, that's today, not historic footage and not an animation, he shot those things. He edits the whole thing. He scores the entire, it's got a soundtrack from end to end, and he finds the music and sets the levels and finds stuff that goes with the scene. And then we've got 2 full-time animators. So we animate all of these economic processes to make them easier for your viewers to understand. So Hidden Secrets of Money, episode 7, deals with, you talked about velocity, and they can print as much as they want, and they can type up a bunch of currency. They can go $1 trillion, that account right there. They just credit it to an account. That's how long it takes to create $1 trillion. The reason gold and silver are money, and all of these other things are currency, they're not money. And your viewers need to understand the difference between currency and money. That's episode 1 of Hidden Secrets of Money. Currency has to be a medium of exchange, a unit of account. It's got to be portable, durable, divisible. Something called fungible, where all the units are interchangeable. If I loan you a 20, you don't have to pay me back that same $20 bill. Yes. You can pay me back a 10, a 5, and 5 ones, and I'm happy. Yeah. So that's fungibility. Money has to be all of those things, plus a store of value over long periods of time. National fiat currencies, by their very design, cannot store value over long periods of time. It's a pyramid scheme scam where they always have to create new currency, because the currency, each time a new unit of currency comes into existence, it's owed back plus interest, and the currency to pay the interest doesn't exist yet. And so they have to borrow more when they pay it back, that's deflationary. It collapses the currency supply. So they have to borrow more into existence and promise to pay that back plus interest. And so that's episode 4 of Hidden Secrets of Money. If people want to get a little bit better grasp on the financial system, the whole way the world monetary system works, this series, and by the way, it's shot in 18 countries, and we follow the history of money, but we also show how it reflects on you today, how the first great inflation in Athens in I think it was 427 BC or something like that. I can't remember the current time, but how that reflects on what's happening today, because basically, they lost the war with Sparta over currency. That was part of what brought the great culture of Athens down and eventually became just nothing but a satellite of Rome, was currency debasement, deficit spending to fund public works and war. And
I was going to say, Mike, I think most of our audience have probably watched it all, and that was the Hidden Secrets of Money did get #1 in that top 10 finance and economics list I put together a while back as well. So hopefully they've watched it all, and a lot of people have been telling me they've been re-watching it lately. But one of the concepts I haven't heard many people talking about that you mentioned in that series as well is when societies sort of reach their peak and they kind of self-indulge, and we see that a lot in modern society. And it was one of the reasons why I thought that Australia, Europe, and the US were going to get hit worse in this crisis, because they're just so used, they've had it so good. We haven't had a recession for 30 years in Australia, and I just think that this is just such a rude shock for people that are watching these food shows, these dating shows. It's just so different to the way things were for our grandparents in the Great Depression, for example.
Yeah, you've been through the second longest economic expansion in all of world history. There was one that was longer in Japan, but and that's coming to an end. It already came to an end with what's going on right now. You don't know it yet. I mean, the Reserve Bank of Australia will announce this once they've got the data, and it takes 2 consecutive quarters of economic contraction and then a month or so to compile the data. So once a recession starts, you won't know for at least 7 months that it's officially a recession, but it started. And the thing is, I spoke in Australia back in 2014 in Sydney and Melbourne, and I got all this data from the University of New South Wales, from the Reserve Bank of Australia, from, I can't remember, there was like 4 different Australian sources that I used. And I showed how you were already in a massive real estate bubble, that the Australian real estate, all of the first world, the US, Canada, Australia, New Zealand, and England, they were going into these massive bubbles back in 2006, 2007, and it popped everywhere except for Australia and New Zealand. And those economies, their real estate bubble just sort of took a breath. It went level for about a year. But then you did all of these things where to stimulate the economy and stuff, and it took back off again. And so there's a section, I've got a new book coming out, The Great Gold and Silver Rush of the 21st Century, And so much of it is becoming outdated before I can get it released because of the coronavirus popping the bubbles that I was writing about. But one of them was the Australian real estate bubble. And it's a very sad thing. But millions of Australians are about to get severely punished for going out into debt at the peak of a real estate bubble. It's going to be very sad, and it's the fault of all of these politicians and Keynesian central bankers that sold you a dream that because people want to have that latest fashion, the new car and the bigger house right now, and when they do that, they're pulling a transaction that would have happened out in the future somewhere. They're pulling that forward today, going into debt, but then they have to repay that same amount plus interest. And so as they make those debt payments, they're foregoing future transactions that equal that amount plus the amount of the interest. And so when you have a central bank lower interest rates like that suddenly below what the free market would normally dictate, it pulls those transactions out of the future. It boosts the economy today. Velocity picks up. Where velocity, if your viewers haven't watched episode 7 of Hidden Secrets of Money, it's how many times a unit of currency changes hands over a certain period of time. And so that picks up lots of new transactions. That creates an economic boom, and all of the businesses are selling a lot of goods and services. Now they need to go out and borrow a bunch of currency to expand their plants. They're investing in buildings and equipment and employees. And so now they've got more capacity, and they produce more goods to fill that short-term boom that was just an illusion caused by the central bank. And then when transactions slow in the future, these businesses have all of this debt that they've got to service. And so they geared up for this illusion that they thought was there. It was nothing but a short-term mirage. And then when the economy slows, a lot of these businesses have to lay off employees, file for bankruptcy protection, or possibly close their doors. And when that happens, those employees that lost their jobs have to put their homes on the market. And then the price of homes spirals down as more and more of them do that. And this is a boom-bust cycle that we're all caught up in, that's caused by Keynesian economic thinking that's about to be proven wrong.
Absolutely. And there's a lot of people that are going to be vindicated. They've been talking about this for years. Other thing that you sort of mentioned then was when people go into debt, a lot of these credit card rates are still at 17% interest. So it's not only the debt and borrowing from the future that weighs you down, it's the inequality gap that gets driven by the interest you pay on it as well. And then I think that, whether you think
about it, 17% in a world with negative interest rates.
Exactly.
How much? I mean, how often do you get raped by the banks?
And then we've got, as you say, currency creation and inflation. That's a lot higher. We've both done videos about that. People understand that concept well now.
But they didn't actually loan you anything. Your signature created the currency, and they charge you 17%.
Exactly.
It's immoral. It's crazy.
Tying it all together, though, I think people need to understand that this is where gold and silver, and I think Bitcoin as well, we'll get into that later, this is where these assets are going to have this just asymmetric upside, because water finds its level, and all this money and debt has to be paid off. It has to come into existence at some point in the future. And now Trump's talking about $1 trillion here. The Fed are talking about $1 trillion there. At some point, this money wants to go into real assets and
currency. It's not money, it's currency. Go ahead.
Yeah, and I just think when people hear, Bitcoin couldn't go to that price or gold couldn't go to $10,000, it's just math that the water is going to find its level from all this debt and currency that's been created.
I think anybody that thinks gold isn't going to go way past $10,000 is absolutely nuts, and they're not looking at the facts. When you're creating all this currency but not creating new wealth to match it, that currency has to go somewhere. And at first, it's going to go into hiding because velocity will slow. The one thing that the world's central banks can control interest rates, and they can control quantity of currency, but they cannot control velocity. That's completely part of the realm of the public. It's the mood of the public. If the public gets scared, they stop spending, velocity slows, and it cancels out any effect. It doesn't matter how much the central banks create. When they've created enough, though, to where people feel, well, I think I've got enough saved. So, see, in Australia, Australia and New Zealand have good population demographics, age demographics. You've got enough new workers coming up. You don't have a huge retiring population like we have in the United States and in Europe. And Japan, they're really screwed. But with the population demographic in the United States, all these aging baby boomers, like I'm a middle baby boomer. I'm 64 years old. I should be retiring next year. I'm probably not going to because I enjoy a lot of what I do. But I don't feel old yet. I'm still having a good time. So hopefully there's an economy left. What I'm worried about is like a modern dark ages or a global depression that lasts years and years. But when these baby boomers, when they get mailed checks by the government, there's some congresswoman in the United States that just proposed that they send $2,000 as the initial payment to every person in the United States, including all, if somebody has kids, they'll be getting, if they've got 2 kids, they'll be getting $8,000 a couple, and so that's the initial payment. And then $1,000 per month until 1 year after the coronavirus. And we don't know how long the coronavirus pandemic will last. And then her proposal includes that the Treasury mint 2 platinum coins, $1 trillion platinum coins. Now, she doesn't realize that the first year of payments, and this is going to go for a year after this. So the Treasury is going to mint 2 $1 trillion coins. So she's going to pay for this $4 trillion. It's a minimum of a $4 trillion program, and she's going to pay for it with 2 $1 trillion coins. She doesn't seem to understand math, basic math. So, but I mean, the whole thing, this is all just silly. There's going to be a tremendous reconciliation that is coming. And this is the end of a more than 100-year-old debt supercycle that we're coming up to. And when there is going to be, it's going to be crazy at first. You're going to see this huge deflation. You need to watch the roller coaster crash. That's episode 6 of Hidden Secrets of Money. And it's what I wrote in my book in 2005, 6, and 7. When I was writing my book, I could see this very clearly. The threat of deflation with the initial market crash that we had in 2008. I wrote this all before 2008. A big reflation as the central banks panic and big inflation. And then a true deflation. And I believe that this is going to be a 2-part crash. You're going to see first a crash of the markets. That's what we're seeing now. But people are rushing toward bonds and the US dollar. And but then there's going to be a currency crisis later. The second half of this crash is a currency crisis. And I've been saying this for years also. What's really interesting, if you read a bunch of monetary history and then you just ignore whatever the news media is telling you, and you go to the, in Australia, you should be going to the Reserve Bank of Australia's website and going anywhere where you can collect monetary data. I go to the Federal Reserve. I'm on there at least a day or 2 out of the week, generating charts and trying to figure out what's happening and how it reflects money. You can sort of get a very clear picture of what's going to happen. You just don't know when. Yeah. And so I tend to be early, but I had a pretty clear picture, and I wrote it all in my book, and it's coming true like exactly as I wrote it. And I put it in this video series, and I've been able to stand by what I put in there and never change my tune. For 15 years now, I've been basically saying the same thing. And even when it was it would have been much more profitable for me to jump on the latest bandwagon on stocks or whatever. You watch all these people in the financial media, and they jump on whatever is going to make them a short-term profit. But I knew what was going to happen, and I just stuck with my story. A lot of people didn't believe me, but now it's happening. And but what I'm really worried about, I see there's always a bell curve of probabilities, and there's tail risks on either side. And this bell curve of probabilities is very distorted and shifted over. It's got a risk and then very truncated on one end, and it goes from the possibility of this being of everything going along okay. Well, that's a 0% probability. The possibility that this is just going to be a recession. Oh, I give that a less than 10%. Even a bad recession, I give that less than 10%. So those are the tail risks over here. And then you go over to here, and we have global depression, 80% risk, and then 10% over on this side of modern dark ages. I mean, the whole system falling apart, technology breaking down, the whole monetary system breaking down. And that would be, this could be financial Armageddon. It's really hard to say. But you can't just have the entire world shut down like this. And, what are your choices, though? Let 100 million people die, or let hundreds of millions of people die over a long period of time because society just completely breaks down. And you've seen this, if you look at history, Rome, the greatest culture of ancient times, broke down and faded into history, and we ended up with the Dark Ages. This can happen.
Yeah, and people say, that's really doom and gloom and whatnot, but, you talk to your grandparents and they lived through that, and people will come out the other side eventually. But what would you say to the people at home that have, just lost their job? Is it just about getting through and doing the basics? Do you find a new skill? Do you try and make yourself useful online and earn a second income? What do you recommend people do?
Yeah, well, I live up on the top of a high-rise building here in Puerto Rico. I was trying to buy a ranch. One thing, plant a garden. Seeds are cheap. You can get them online. And I am actually going to put some window boxes outside and plant a garden at my condo here in Puerto Rico. I was trying to buy a ranch. I bought 50 solar panels. I bought 3 Tesla Powerwalls, but they closed all businesses the day they were supposed to deliver the Powerwalls. So they never got, and I was going to buy the ranch the following week. And so all of those plans went out the window. I was just a little bit too late. This is one of the things about exponential growth. It just catches you by surprise. We're just not wired for exponential growth. And by the way, the cases of coronavirus doubles. It goes up tenfold about every 2 weeks. But if you look at the rate of the spread, there's only, I think there's 196 countries, and it's now in 193. And just a week ago, it was in less than half of the countries on the planet. So it's quite amazing. Yeah, how to get ready for this, how to get ready for a collapse of the financial system. If you can get any crypto, some cryptos are going to do well, but there's so many thousands upon thousands upon thousands of cryptos that the vast majority are just trash, and they're probably going to go to zero.
Well, I might jump in there, Mike, because I did want to ask you specifically about that. So there's a couple of things that I wanted to cover here. I think that it's so funny we see someone like, Peter Schiff knocking Bitcoin, and then we see Grayscale, who are one of the most important companies in the crypto space, come out and launch this Drop Gold campaign. And here I am sort of saying that, guys, both can coexist. We're basically on the same team. And when the world financial markets crash, the trillions of dollars in the hedge funds and the wealthy are going to seek the asset with a 5,000-year track record. And there's so much money that needs to find a home that gold can provide that. Bitcoin can't quite provide that yet. It's not big enough. It's not trusted enough. So they're going to play different roles. Our mantra on the channel, as you say, 99% of these coins are trash and going to zero. But I certainly think that Bitcoin is the king and the blue chip, and then we have some other, interesting technology style plays. But is that similar to what your thoughts are?
Yes, I do believe that gold and silver have a 5,000-year history. They've got this absolute proof that they're not going anywhere. And one of the things that is interesting is that a lot of the world's central banks have been accumulating gold at a frantic pace, especially since 2008. I don't know of any central bank that owns Bitcoin. You talked about Peter Schiff. I was the first dealer to take Bitcoin, the very first precious metals dealer that'll sell you. But we accept Bitcoin, and you can buy precious and Bitcoin Cash, and I think Ethereum, so you can buy gold and silver with. And lately, Peter Schiff is also doing that, but he hates Bitcoin. And people send him Bitcoin to try to get him started on it. And he just sells the Bitcoin immediately and buys gold. And then he lost a bunch of his Bitcoin because he lost his keys. We have never asked for a donation or anything. We've put out all of this information. Those Hidden Secrets of Money episodes are extremely expensive to produce. It can be, more than $100,000. It can be a couple $100,000 to produce an episode. They take a long time. There's a big staff, and then we put them out there for free. By giving people all of this information, it's like paying it forward. Some of them come back and trust us. But what amazes me is all of the crypto people that are trying to convince Peter Schiff about Bitcoin by giving him Bitcoin. Stop. Yeah. That's all I got to say.
Yeah.
He hates Bitcoin.
The next question we had a lot from our followers was your thoughts around these newer sort of pegged currencies. Now in Australia, we've got a few trusted, the Perth Mint, Ainsley Bullion. A few of these guys have come out with these digital tokens that are pegged to gold and silver. And I want people at home to know there's a lot of scams out there that are going to tell you that they're pegged to gold and silver, and they're just trying to scam you. So what are your thoughts
on proof and auditing do you have of the bars that are in a vault? That's one of the things that's important, is having third-party audits. It would be easy too, though, for a company to make up an audit firm name and still go out and sell this stuff. I prefer, there's a whole lot of scams out there. People should go and download my book from my website, goldsilver.com. The book is free. It's the #1 selling book on precious metals and has been since it came out in 2008. I updated it in 2015. And almost every question that I have been asked since it came out in 2008, the last 12 years, almost every question that I've been asked is answered in the book there. And a lot of the stuff that I predicted came true. The rest of it is coming true right now. But it's free, and then you can download it as a PDF, and please just send it to email it to all your friends, anybody you care about, your friends, your relatives, and it takes 30 seconds to, you can be reading it in 30 seconds. What was the question again? I was
just going to ask, Mike, would it be something that you'd explore in the future, gold and silver pegged digital tokens for people?
Yeah. Well, there's a whole lot of scams in there. There is some digital gold that you can trust. There's places that have been around for quite a while. They better have a pretty good trust mechanism behind them. What I've got is we create accounts at Brinks Security, and you can select vaults in Hong Kong, Singapore, Toronto, Salt Lake City, Utah. I believe we're adding vaults in Switzerland, maybe Dubai and London. But this is a third-party vaulting service that is not part of the banking system. If there's a banking holiday If governments around the world do close down the banks and then do bail-ins or bailouts and stuff like that, Brinks isn't part of that. And we open accounts at Brinks on your behalf. So it's actually your account with Brinks, not with us. Our deal is that we have to do all the, we got negotiated very, very low storage fees, and it's actually less expensive to do this than an ETF, an exchange traded fund like SLV or GLD. Their management fees chip away at the performance of these gold and silver backed exchange traded funds, which are, by the way, are a derivative. Mm-hmm. If the stock markets are closed, or if a brokerage house has a problem, or they're not. Also, they follow the spot price of gold and silver. And right now, there's this huge divergence. If you've got real physical, the value of your assets are going up, where right now gold and silver, the spot price is going down because it's futures contracts that determine the global spot price of gold and silver. And I can write out as many IOUs for gold and silver as you want, pass them out willy-nilly, and that's basically what happens on the commodities exchange.
Well, that was my next question.
Yeah, there's shortages developing in the precious metals market. It's hard to get. We used to have dozens of different items that you can buy. And, now that I don't know, there's like 16 gold and silver products on our website where it's getting very hard to source. And then with, just when demand is ramping up with coronavirus, what's going to be happening, all of the mines are going to be shutting down. You don't want to send, dozens of workers down into a hole to work in close proximity with each other. They're going to be shut down for months. The refineries are going to be shut down. The mints are going to be shut down. So there's going to be no gold and silver, real gold and silver available just when everybody wants it. So the prices are going to go astronomical. They're going to become unaffordium and unobtainium. That's what I call them.
I wanted to walk people through that concept. So just quickly tying together what Mike was saying, he's talking about the unallocated bullion that you could have with precious metals dealers like Mike as well. So it's a bit different to the digital tokens, but this is something that's been around for a while on the website. But
we've got allocated, and we've also got segregated that you can, if you pick segregated, it costs more to store because it's like having your own safe deposit box at Brinks.
Yeah.
Similar to that. You're going to get the exact same coins and bars back in 30 years. If you go with the allocated, we don't have anything that's unallocated.
Okay.
If you go with allocated, then there's a whole bunch of gold eagles or gold bars or silver bars, and you're going to get back the same product that you selected, just not the exact same unit, and not the exact same coin.
Okay, fantastic. Yeah. Let's talk about the manipulation and the difference between the physical and the paper markets, because that's something that I've spoken about a lot, and I think we got to that breaking point, and people watch silver go down to $11 on the paper markets, and at the same time, lines around the corner at all the mints, they're sold out for weeks. You explained the other day in another interview about the futures contract. So I want to walk people through how you buy that futures contract for $12, and at some point that is going to break when they can't actually deliver it for that price. But you own all these futures contracts for them to promise to deliver you silver at $12, but they can't get it. So eventually it's almost like the paper price is going to be pushing up the real price because people are going to demand physical delivery.
Well, one of the things that people don't understand, futures contracts, like I said, it's a promise to pay. Now, there is gold and silver in vaults on the commodities exchange, except it's leveraged. They sell a whole lot more contracts than there actually is, because typically about 98% of them are settled in cash. Mm-hmm. It's when they actually ask for the gold or silver that they've been promised that we're going to run into a problem, because there have been times when there's more than 100 owners per ounce. We don't have quite that level, but with silver, we've got about 10 owners per ounce right now. Sort of like a game of musical chairs. There's one chair and there's 10 people dancing while the music is playing. But when the music stops, watch out. Gold and silver could suddenly jump up in price, and I mean a gap up where they go up by multiples. it is entirely within the realm of possibility. And all of that stuff comes to a bad end. And for me, I never make a recommendation. I never tell people what to do. I don't give advice. What I do is I tell people what I'm doing. And for years, I've been taking whatever I get paid and my profits and plowing it into gold, silver, and some cryptocurrency, some select cryptocurrencies. But for me, I try, I like things that have mass and weight to them. And so, and I'm in my 60s. Somebody that's in their teens, 20s, 30s, they trust virtual assets a whole lot more than I do. It does require the internet to work and you to have power for Bitcoin to be there. It doesn't require the internet to work or for me to have power for gold to be there. So I keep some where I can lay my hands on it. But as somebody that's high profile and somebody that has a substantial holdings, I don't want to have that at home. So I've got a whole bunch, and I've hired men with guns to guard it in the highest security vaults that you can get, and it's fully insured. That's at Brinks in storage accounts. And then I can sell it, and I can have currency back in my bank account quicker than if you sell stock at a brokerage house, and then it clears and they transfer it into your account. I was really surprised. I was going to do some interviews on Tesla. I'm a big Tesla fan. I had a 2010 Roadster, a 2012 Roadster, a 2012. I had the 599th Model S off the production line. And now I've got a dual motor performance Model 3, and I still have my 2011 Roadster. I just bought some Tesla Powerwalls, and I was going to do an interview and talk about Tesla. So I decided, well, I'll put my money where my mouth is, currency where my mouth is. Bought some Tesla stock, and but then didn't do the interview, and had to pay a bunch of taxes that were like surprise. And so I sold I bought my Tesla stock at 230 and sold it at 250, and then it went to 900 right after that. But it took It took like 3 or 4 days for this to clear and get back into my account as cash, and it really surprised me because we can do the same thing in 2 or 3 days with gold in your. And the neat thing about right now, gold and silver deliveries are running anywhere from like a week to 30 days to acquire the product and actually deliver it. But when we take an order, we have a promise from a mint or refiner that actually does have gold and silver. I mean, your name is on it. It's just in process, basically. But when it's going into a storage account, you can sell, if you change your mind tomorrow, you can sell it back. Even though it hasn't been delivered yet, you can sell it back. So it's highly liquid and it's insured. And so that's where I keep the vast majority of my holdings. I do believe in having some, I established a line of bullion jewelry, I call it. We went direct to the supplier that makes chain by the miles, that sells it to all the jewelry manufacturers that turn it into necklaces and stuff. And we got them to make necklaces that have a specific weight range for us. And then so we were able to source them much closer to spot. And then the markup is much less on them that we charge. And when you go to a jewelry store, you're paying 2, 3, 4, 5 times the price of the actual metal content when you buy gold jewelry. And it's not like that with us. The reason I like jewelry is because throughout history, jewelry doesn't get confiscated, because then if a government tries to confiscate or nationalize jewelry, now you're pissing off the women.
Mike,
you don't want to do that.
You mentioned before that you think that's an increasing chance of happening. I mean, do you think that...
I didn't think so when I wrote my book originally. However, when I look at I sometimes say it's dangerous to swim near a drowning man. When I was about, I don't know, 9, 10, 11, my family, I was in a house where I had a swimming pool. And a friend came over that didn't know how to swim. And we were playing in the pool and we were in the shallow end. The second his feet couldn't touch the water, he grabbed me and shoved me underwater. And I was within seconds of drowning. And my mother saw him and pulled him out of the pool, pulled him off of me. So if you're near somebody that is drowning, that's going under, you're going to get pulled under with them. When all of these governments start to drown because of all this phony monetary system with all of this debt, I wouldn't be surprised for them to try to make gold and silver illegal. And it's always bars and coins that they go after. So having some jewelry, and also when you travel into another country, there's a landing card that you have to fill out. It always says, are you bringing $10,000 or more of cash or cash equivalents such as stocks, bonds, and so on into the country? And with jewelry, you check no on that box. I've got like $100,000 worth of gold that I can put around my neck. It's going to look a little silly, but I can go into another country and not worry about that. And I'm much less worried about nationalization. I think that if they do get nationalized, and nationalization is different from confiscation. Confiscation, you don't get compensated for what the government took. In 1933, for instance, Americans had to turn over their gold at any member branch of the Federal Reserve, and you got compensated. They bought it from you. Yeah. They didn't bust down your door, smack you over the head, and take it. But it's always the bars and coins they go after. They don't go after the jewelry. And so it just makes me sleep a little better at night knowing that I've got some of that. So I try and take a balance. I had my precious metals spread out around the world, but I'll tell you, with what's happening in Hong Kong, I got my stuff out of there. And but Singapore has a nice, very secure facility, and it's a good, stable country. Canada, so anyway,
let's hope that doesn't come to that. Maybe another reason to have it in your own storage for those that can.
But I do think that most, I measure stuff with stuff. I try to take currency out of the equation. If you take a 100-year chart of real estate, oil, stock market, precious metals like gold, and you divide 100 years of the price of the Dow Jones Industrial Average, the points on the Dow, by the price of gold, what you discover is that it just goes sideways like this. And the asset that you're measuring it with is doing the exact opposite mirror image wave. And so if you're invested in just one asset class for your entire lifetime, you're actually not making any gains. Your asset measured against other stuff, measured in currency, it always goes up. So people think that things actually go up, but they don't. They go up and down in this valuation range when you measure it against how many shares of stock is it worth, how many barrels of oil is it worth, how many bushels of wheat, what percentage of a house is my ounce of gold worth. Well, the value of the gold goes up, bounces up and down compared to real estate or oil, and vice versa.
Well,
and so right now, there's this tremendous shift happening, and I know that precious metals and some select cryptocurrencies are going to buy a whole lot more real estate, stocks, and so on in the future. As far as getting ready, if your listeners don't have any capital that they have accumulated, and they don't have anything that they can put into gold and cryptos, then try and find a sector that is going to do well in this. And, so you've got to go into things that people need. They always have to fill their tank. They always have to go shopping. And, during the last depression, bars did well. So I don't know, right now all the bars are closed here because of the virus, but anybody opening a bar, because all of the bars here are going to end up going out of business. I mean, we've got this 15-day shutdown of Puerto Rico. Everything is just shut down. But at the end of that 15 day, they're going to extend it, another 15 days, and then another 15 days after that.
Yeah.
I would imagine that more than 80% of all the restaurants are going to fail, pretty much every bar, because they just don't want any place open where people come in close contact with each other.
Yeah, I tend to agree. Mike, the next question I had was about the gold to silver ratio, speaking of relationships. And I sort of joked your commitment to the cause, your hair's changing color with the gold to silver ratio over the years. But
yes, it's becoming a lot more silver.
But it's recently gone out over 100, which a lot of people didn't think it would get to. I mean, I've kind of got this theory that...
I said it was going to go to 100, but you know what? Now I think it's going to go, it's up at 120. I think it could go to 150. But I still, even though I think it could go to 150, I still buy silver knowing gold may outperform it in the short term, because when this reverses, I think it's going to be vicious and very quick. And so I still will not allow myself to buy gold, even though that's my instinct. You hear all this bad news, you want to buy gold. But at this ratio, I mean, you look at it historically, and here's what's going to happen. Gold will outperform silver in the panic phase of this, and then there's going to come a point in time once gold passes $5,000 an ounce, and it will. I mean, in my opinion, $10,000 is like a stupid low price for gold at this point. And the more currency they create, the higher that number goes. And that number doesn't mean anything. It's how much stuff can you buy with it. Gold is undervalued compared to land, compared to the currency supply, compared to the stock market, compared to real estate. There's just almost nothing that is undervalued compared to gold, except silver. I mean, it's way undervalued compared to gold. But once it passes a certain point, just like happened in 1979, gold was outperforming silver. And then once gold passed $400, back then in the United States, the median income was less than $10,000. It was like $9,300 or something like that. So a guy rushes into the bank, and he withdraws $500, rushes into a coin shop and says, I want to buy gold too. And they plop one coin in his hand. And that's the point where he goes, oh, is that all I can get? And says, how much is the silver? Oh, well, you can get 50 of those for one. Give me the silver. That's the point where silver takes off like a rocket. And it went to a 14-to-1 ratio when they peaked in 1980. So silver's value was 1/14 of gold's. Right now, it's 1/120th. And the history is the first couple thousand years that gold and silver were money. It varied depending. Alexander the Great tried to peg it at 10-to-1. That fell apart. But it varied between 10-to-1 and 20-to-1, depending on where you were on the planet. But the average was about 14 or 15-to-1. And here we are up at 120, and it's only been out of whack for the past century and a half, ever since we went off of the bimetal standards. So it's the late 1800s when we came across the Comstock lode, the Silver Valley in Coeur d'Alene, Idaho. The Comstock lode just barfed out this immense quantity of silver in a very short period of time, that silver's value plummeted compared to gold. And so what you're going to see when there is monetary demand, when people are buying silver because they're turning back to money, when gold becomes a little too expensive. But in the meantime, I think you could see 150. It's entirely within the realm of possibility. But then when it reverses, it's if you own silver and you bought it at 120, and you sell at you convert your silver into gold, some of it at 40. At that point, let me see, at 10 you would be getting 12 times. At 20 you would be getting 6 times. So at 40 you're getting 3 times more gold than you paid for. And then you do another tranche if it hits 20, sell another amount. This is my plan. I've got tranches sort of mapped out. Yeah. And hopefully it goes, I believe that you're probably going to see it surpass that 14-to-1 ratio. It might go down to 10. Can you imagine getting 12 times more gold than you paid for?
Yeah, all I was going to say is I think it's getting dragged down at the moment because of that industrial component. We're seeing, copper, oil, the economy's going into recession. There's going to be less in solar panels. That's the thought process. And then as it flips, it's the same unit biases.
60% of the supply comes as a byproduct from mining copper and zinc and lead. And so when that supply goes away, just when everybody wants silver, and this was in the book, and that's going to happen.
It's the same unit bias we see in cryptocurrencies. When people want the thing that's cheaper, that's why they're going to go to silver when it's got that monetary premium. Yeah. Well, Mike, I think that's everything I had today. It's been amazing. Is there any topics that you think we need to touch on for people at home? I'll put the link to get the free book down below as well.
There's no topics. Just go to goldsilver.com, get the free book. We have a tremendous news page too. My best friend from more than 50 years. I mean, we met, I think, in 7th grade. We're 13 years old, and we've been best friends for that long. And he works in 2007. He started putting up the news, and for 4 years, he didn't take a single day off. I'd say, you gotta take the weekend off. You're gonna go insane. He goes, news never sleeps. And so now he takes the weekends off. But you want somebody scouring hundreds of articles, picking the best ones that are going to have the greatest effect on your life and putting them up. And so there's somewhere between like 30 and 50 stories on our news site every day. Your followers, I would say bookmark that page, make it your home page on your computer, and check out that news every day. Just pick out a few of those stories because stuff is happening at such a fast pace. It's really important to be up on the latest monetary and financial information. The stuff that you see by the talking heads on the regular news media, try to ignore all of the noise that you can. The noise just fills your head with stuff that keeps you from keeping your eye on the real ball. And the real ball, I mean, if you go to the Federal Reserve's website, the OECD, the IMF, the World Bank, and you start generating charts, it's actually addictive. I know it is for me. And you can see the future when you do that. So
absolutely. I think that's a great place to wrap up, Mike. Never been more bullish on gold and silver and cryptos with what's happening. So thanks so much for joining us. Thanks for everything you do. And we'll have to catch up again in future.
Thank you for having me.
Thanks, guys.